Guys, it's Kyle from K Capital. It is October 3rd, about 11:58 a.m. Hope everyone's doing well. First and foremost, let's go over where the markets are at. I saw a nice bounce Friday and Thursday in the overall Dow. This play right here is pretty much expected after the pullback. Obviously, you're going to see a nice bear flag here in terms of this recovery. So I would expect this to trace back a little bit. We want to pull back and take a look at the overall trend. Personally, I think we're going to retest the lows here, at least in the 1600 to 1550 range, or 1580 range. Frankly, I think we do this in the next couple of weeks, but overall, I'm still pretty bullish on the overall market, and here's why. This happens very rarely where we break the 200 EMA in the long-term trend, but if you really pull back, this is only a 5 to 10% correction overall in the Dow. So, we need this type of correction similar to what we had in late 2011 to where we sell off, but the overall trend should recover. Now, if it doesn't, that point will be broken right around here where we take out our prior lows. So that would be retesting the 15,337 range and retesting and breaking through that 15,819 range. Personally, I think we're going to play down for the next couple of weeks, if not through the end of the year. But in the long term, for the next year to two, I think we do recover and we retest 1,800 and above. It's just right now, obviously, what I've alluded to several times in the last couple of weeks is that the trend right now is very bearish. We don't want to really be going long in the short term, given that our focus is mainly swing trades. So we're going to continue to really be cautious in this market. Obviously, this isn't a V-shaped recovery like we had in October of 2014, where we saw the massive sell-off of 10% and then an immediate recovery. Obviously, what you're seeing here is that massive sell-off, and then we're hitting significant resistance here. We've hit that a few times in terms of the M&A or EMA ribbon, where we tested the 20, 25, and 30 EMAs, but then obviously pulled back. So frankly, I think we pull back again, and I still think we're going to hit that level of the 1600 to 1580 range. I just think it happens over the next couple weeks. If we want to take a step into the weeds a little bit and we want to look at the Russell 2000, what we can see is a similar pattern. We're going to retest, those prior lows, I think. And I think on the Russell, I think those lows are in the 1060 to 1040 range. Again, when we break down here, we're not going to have a V-shaped recovery. I think we already would have had that unless the Fed comes out and really changes their strategy. But as everyone's aware, they haven't really given any true idea of what they're going to do. I think Yellen basically comes out once a week and says things that's confusing the market, and she's really not helping anything. But we're going to remain cautious, at least for next week and the week after. There's no rush, obviously, to jump into anything to try and make some major moves here. As I alluded to before, over the last couple of weeks, specifically the last week, our positions are going to be smaller than the typical 5 to 10% of your total capital. We're going to trade here maybe 1/5 to 1/4 the normal size positions, just because we don't know really where the market's going to go in the time being. You can make the argument that if you're a long-term investor, you can pick up some stocks pretty cheap right now, but we're not that. Our time frame is a week to several weeks, if not a month or two. That's our swing trading time frame, and you need to stick to your time frame and base your strategy off of that. We're not day traders and we're not long-term investors. So in that time frame, I think we're going to still be bearish. And then overall in the long term, I think we can still see some significant upside in their overall markets in the year to 2 years. Again, it's just a matter of being patient and sticking to your rules. So with that, let's get to the specific stocks that we are in. Last week was a pretty positive week overall. I was actually pretty happy with the way some of these played out. So if we want to take a look at these and focus more on the 6-month to 8-month time frame, what you can see here is that EMKR had a great bounce. The play here has been consistent and the same since the beginning. We wanted to play the midpoint of this breakout candle. We did exactly that, and we went long, I think, in the 704 range. Obviously, with the sell-off in the market through August, we saw some significant selling here, which is expected. But as you can see, this area of support is holding, and that's what I've said continuously for the last 2 months. So we saw some great buying here over the last week and a half. Frankly, I think this definitely tests the 740 range, and I think we see 10 in the next 2 months. What's going to be interesting is we're going to have an earnings call, obviously, coming up. One of my major rules is not to hold through those, but what we're going to do here is definitely add a stop loss order, not a mental stop loss. just to protect our downside. But I think this is something that could potentially hit 10 in the next couple weeks. So I'm pretty bullish on this chart to say the least, especially after Friday's movement here. As you can see, it definitely tested those lows and it was bought right back into almost immediately. You saw bids coming into the stock. So that's definitely a bullish sign. Going into JAKK. This is one that actually, technically, I typically would have sold if the market wasn't so bearish. I would have sold right in this level when the stock basically just dropped. The reason I didn't is because they had significant fundamental stories come out in terms of, I think, a new partnership, a new contract, and a new product they're marketing. Basically, this is a toy stock, so they more or less do something similar to Mattel, and they issued, I think, a new merchandising contract to take on product that they haven't had before, or they haven't had exposure to. So fundamentally, I was kind of intrigued by that, and then technically, if you look at it, this area of support was pretty significant for us. So if we looked at the prior time where this tested this level, and that level being the 200 exponential moving averages, we didn't really want to sell until that was broke. Now, again, we're past our mental stop loss, but we're holding this because of those fundamental stories. So right now, we're down, I think, 70 cents on this stock, or right around 8 to 9%. Our max threshold was 10% in terms of our stop loss. But again, we held because this 200 exponential moving averages is pretty key. And it held that very well. You can see that it held it more or less back on 821 when the market crashed. And then it's definitely holding it right through the beginning of October. So typically, one thing I also want to look at in terms of our swing trades is take a step back and look at the weekly chart. And that can kind of give you an overall sense of where the stock is at long term. And if you can see, this has obviously been beaten down pretty significantly over the last 4 years. And one thing that's interesting to see is, when it tested the 200 exponential moving average here and finally broke down, it broke down hard. Well, the flip side of that is when it tests the 200 moving average to the bull side or to the long side, eventually that's going to break. And when it does, I think you're going to see a significant run back up to, say, 15, right around that area of support, so maybe 13. Now, obviously, that's going to take a long time here, just like it took a long time for this trend to play out. But it's something to keep in your mind that the reason we haven't really broken through the $10 range hard is because you're hitting that 200 EMA level. So really it's something to where, if we hold here, we could see a significant reversal in terms of the long-term trend. So again, watching this closely for, a move past the 845 to 840 range. Obviously, at some point, we're going to have to take a loss if that occurs. But for the time being, I'm pretty bullish on this chart as well. Just as long as that 200-day moving average holds right around the 830 range. So continuing on, let's go to Crown, CRWN. So Crown has been in a great uptrend for the last probably 6 to 7 months. Typically I wouldn't want to buy this high, but it's something that I think is very intriguing in terms of the trend. This was similar to EMKR in terms of the reasoning of why we bought. So we had a significant candle here. It pulled back. We went long at 487. We're now up roughly 10, 11% in this. But you can see it's consolidating along this pattern here, forming what I would consider is a rough bull or pennant formation here. And I say rough because it's has some significant outliers in terms of the actual candles themselves. And you can see the long tails here to the bear side and long tails here to the bull side. But nonetheless, it's still riding that trend, both on the EMAs. It's riding nicely, as well as this trend line here. So again, we're going to hold this. I think it consolidates more and eventually tests this level to break out. I think it's a great chart, so it's something that I think we should continue to watch. Continuing on to our next long is, trying to think, ACXM. So as opposed to being a true swing trade for a week or 2 or 3, this is more of a long-term swing trade where our target holding period is a month to 2 months. On the daily here, what we can see is this had been completely destroyed ever since it broke down the 200 exponential moving average. It's baselined here for the last several months, which is really good news because when the stocks come out of a base like this, they usually rally pretty hard and pretty quick. Add on top of that the fact that this is basically testing and holding the 200 EMA. I think this stock is going to rally soon, and we definitely probably are going to add next week to this. The confirmation and what I alluded to in our pre-market notes and our nightly newsletters is that we needed confirmation this area would hold, and Friday we got that. So this is definitely a nice candle here in terms of holding that EMA. We're probably going to add and then hopefully test to the 25 range next week, if not the week after. But again, we're going to be patient with this because we know that it's a long-term hold. This is one that we definitely would hold through earnings. The logic being, if you look at the trend here, they've had a rough few quarters for the last few quarters, but the stock has started to baseline and rally. So I think it's a type of situation to where the chart is leading the fundamentals, and we could see an upside in terms of the next quarter in terms of beating guidance and estimates from Wall Street. So again, that's one that we're going to continue to hold here. Looking at our long-term investment in Sandridge, again, this is a call option on crude, basically. We had a great week. Friday we rallied, I think, 17%. Thursday we rallied, I think, 12%. Obviously, we're at a significant loss here. But I think this is definitely the turnaround point in this stock. I think the volatility in Russia and Syria is adding to upside in crude. And I think, this is one of the plays that's just getting beat down solely because of the debt levels. But people fail to realize that they have the liquidity to withstand the next year to year and a half. And they're slowly taking care of their balance sheet and delevering. So I think it's something that, we're going to hold this. And we're going to see if we can get, a nice bounce back up to 1. And then maybe a consolidation there and test the 200 EMA. Now, this is a long-term play, as I've alluded to, several times. So we're looking at 12, 18, 24-month period. And we're going to just see how this plays out with crude and where crude trades in the next year. But I'm bullish on crude. I think that it's just a matter of the supply and demand and the fundamentals of the market. And eventually you're going to see a tipping point to where the rig count in the U.S. is completely dropping. Production is going to drop. And WTI crude is going to rally back up to the 60, 70 range. I don't think it gets back up to 100. But a lot of these companies, Sandridge included, can cut costs like they have been. And they can operate at a $60 to $70 crude level into perpetuity. It's just a matter of them surviving this downturn. So I'm still bullish here. Obviously, we're going to continue to hold. And then 2 stocks, or at least 1 stock that is on the watch list and is going to continue to be on the watch list that we may add to next week is MGPI. So this is a pattern that has traded pretty nicely over the last couple quarters. It has rode the 200 EMA nicely. We saw bounces here, and through this period. I am going to probably add next week because I think that this is definitely a great level to add at. The 200 EMA continues to hold, and I think it's going to basically rally nice in the next couple of quarters. So this will be a long-term hold too in terms of the swing. If we look at the overall trend, we can see that once it broke the 200 EMA on the weekly, it went from 6 to 19 and just rode the EMAs all the way up. So the trend's definitely bullish here. On the weekly, when we look at this here, you can see that it may be forming a head and shoulders pattern. We would want to see that trade sideways and trade up. So I'm going to basically be very cautious with this, but still probably open a small position just to see if we can start to test, the $17 to $18 range, since we have bounced off of this level pretty significantly. One thing that I do look for is how it bounces off of that level. And if you can look, you saw large candles here in terms of the buying, which means that people were really interested to get into this more or less at any price through roughly $1. And you didn't see really any significant selling, and that happened 3 times. So it basically tells you that people are interested in purchasing this at that level, and then really it's just a matter of that support holding, and it looks like it has. So that's on the watch list. I'm going to run some scans this weekend to see if we can find any other opportunities. But again, just to summarize, the overall trend here is bearish in the overall market. You want to trade with the trend. You never really want to get stuck going really up current. It's not in your favor as a swing trader. If the market's bearish, we're going to be bearish, and we're going to take really a step back and slow down our positions and cut them down a little bit, and really stay true to our rules and our discipline. It's worked in the past, and it's going to continue to work. It's just a matter of the market calming down and seeing some of the volatility calm down. So if you have any questions, please shoot us an email, kcapitaladvisors@gmail.com, or Kyle Matthew at kcapitaladvisors.com. We will talk soon. Have a great rest of the weekend.